You're standing in the checkout line at Walmart, cart loaded with groceries, when you tap your phone and convert Bitcoin into cash faster than the person ahead can fumble for their credit card. This isn't some futuristic fantasy. This is happening right now to 150 million Americans every single week, and it represents the most explosive shift in financial infrastructure since the invention of the ATM. We're hovering around $4.18 trillion in total crypto market capitalization at the time of this recording. That number recently kissed an all-time high of $4.35 trillion on October 5th, driven primarily by Bitcoin smashing through $125,000 and Ethereum reclaiming momentum above $4,500. According to institutional research from BlackRock, Fidelity, and Charles Schwab, spot Bitcoin and Ethereum exchange-traded funds have absorbed over $70 billion in net inflows since January 2025 alone. That's not retail panic buying, that's pension funds, endowments, and sovereign wealth managers treating digital assets like they're stacking gold bars in vaults. Bitcoin exchange reserves tell an even more remarkable story. They've collapsed from 3.25 million BTC to 2.55 million BTC between early 2024 and October 2025, while spot ETF assets under management exploded past $80 billion. Institutions aren't day trading, they're accumulating for decades. Galaxy Digital projects Bitcoin could reach $150,000 to $185,000 by end 2025, with bullish houses like Fundstrat targeting $250,000 and Standard Chartered seeing $200,000 as achievable given ETF inflows and potential pension fund allocations. Samsung just weaponized crypto for 75 million users. Hear me out. On October 3rd, Samsung and Coinbase announced a strategic partnership that embeds free Coinbase One access into Samsung Wallet for 75 million Galaxy users in the United States. Zero-fee trading, enhanced staking rewards, priority customer support, fund recovery protections, all of it baked directly into Samsung Pay. When a consumer electronics titan weaponizes its distribution network to onboard tens of millions into digital assets, that's capital deployment at systemic scale. And here's where it gets wild. Walmart has activated Bitcoin and Ethereum trading through its OnePay mobile app powered by infrastructure provider Zero Hash. OnePay serves 150 million weekly users and allows customers to buy, hold, trade, and instantly convert crypto to US dollars at checkout, whether they're shopping online or scanning barcodes in store. Federal Reserve data indicates that cross-border stablecoin transactions surpassed $4.6 trillion in the first half of 2025, encompassing over 1 billion individual transactions and slashing average remittance fees from 6% down to roughly 2.5%. Treasury Department sources confirm that stablecoin supply climbed from $2 billion in 2019 to $208 billion by mid-2025, cementing stablecoins' dominance in exchange liquidity and real-time gross settlement frameworks. Lightbulb moment. I remember attending a 2022 finance conference where traditional bankers dismissed stablecoins as unregulated shadow money. Fast forward to 2025, and those same institutions are launching their own stablecoin products because they're watching USDT process $20 to $25 billion in daily transaction volume across major blockchains. Stablecoins powered over $5.7 trillion in on-chain transactions in 2024, surging 66% year-over-year through Q1 2025. Merchant acceptance reached over 25,000 outlets globally as Visa and MasterCard integrated stablecoin settlement rails into their billion-strong merchant networks. PayPal stablecoin, PYUSD, issued by Paxos Trust Company, has grown to a $1.35 billion market cap with deployment on Arbitrum Layer 2 and planned integration with Stellar to enhance cross-border settlement efficiency. Despite commanding only 0.38% of the stablecoin market, where Tether holds 62.5% and USD Coin 24.21%, PYUSD's backing by PayPal's merchant network and transparent reserve policies position it as a key player in programmable payment infrastructure. Survey data from Fireblocks indicates that 90% of financial services respondents cite regulatory compliance frameworks as the primary driver for stablecoin adoption, while 46% of businesses already use stablecoin payments and another 23% are piloting programs. The tokenization tsunami nobody saw coming. Now pay close attention. The Bank for International Settlements published an October 2024 report specifically identifying distributed ledger technology like the XRP ledger as meeting 87% of central bank requirements for CBDC infrastructure. This isn't speculation anymore, you guys. It's documented institutional assessment from the world's central banking authority. Real estate tokenization, which converts property rights into programmable digital tokens, was valued at $2.81 billion in 2023 and is projected to explode to $11.80 billion by 2031, expanding at a compound annual growth rate of 19.9%. Industry insiders report that tokenized real estate could represent 15% of assets under management by 2030, equivalent to a $3 trillion global market. Elevated Returns tokenized the St. Regis Aspen Resort, raising $18 million, and token prices surged 30% within just 18 months, demonstrating tangible investor appetite and serious value accrual potential. But tokenization extends far beyond real estate. By mid-2025, the global real-world asset tokenization market had surpassed $25 billion, and tokenized private credit alone comprised $14.7 billion of this total, representing 58%. U.S. Treasuries account for 34%, with tokenized money market fund assets surging 80% year-to-date to $7.4 billion, backed by Franklin Templeton's Benji Fund, BlackRock's Ethereum Bond Fund, which raised $375 million in 1 week, and Goldman Sachs/BNY Mellon partnerships. Yield-bearing treasury tokens address the $8 billion annual opportunity cost of non-interest-bearing stablecoins by enabling instant redemptions and on-chain settlement, reducing traditional intermediation costs by up to 97%. Tokenized equity platforms now offer over 200 U.S. equities and ETFs for 24/7 trading outside traditional market hours. Kraken and Baiit's X stocks, launched on Solana, facilitate trading of blue-chip names like Apple and Nvidia, while Robinhood's Arbitrum-based pilot for EU users includes private companies such as SpaceX and OpenAI. In early October 2025, the combined value of publicly traded stock tokens reached $412 million, with projections suggesting tokenized equities could grow from $0.6 trillion in 2025 to $18.9 trillion by 2033 at a 53% compound annual growth rate. The implications are staggering for systematic risk assessment. Instantaneous settlement eliminates counterparty risk mitigation delays, fractional ownership democratizes access to high-value equities, and global 24/7 markets optimize portfolio diversification principles across time zones.
And you guys, I have a special trick for you, which nobody seems to be using, and I cannot wrap my head around why. Because if you sign up through my link down in the description onto the BTCC exchange, you get a 10% deposit bonus. And now stay with me here. Now, here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BTCC account, you get on top of your capital you moved another 10% extra trading capital. As an example, if you move or deposit 10K to your account, you get 1K for free. And here is why this is possible. BTCC makes money on trading fees. The more capital you have, the more you trade. The more you trade, the more they earn. So they are literally investing in your trading activity by giving you extra capital up front. And unlike other platforms where bonuses are in the 1 to 3% range, BTCC's bonus is a full 10%. I'm not kidding. I really don't understand why nobody is doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I kindly ask you to pause this video and take your time to make an account. You can thank me later in the description of this video.
Mega reveal: the mining and staking infrastructure explosion. Here's the data that will shock even seasoned investors. Bitcoin's network hash rate smashed records in 2025, surpassing 1.12 billion terahashes per second, fueled by next-generation ASICs delivering energy efficiencies of up to 22.5 watts per terahash. Mining revenue hit $11.2 billion annually, with $13.5 billion attributed to Bitcoin and $2.9 billion to altcoins, underscoring mining's evolution into a capital-intensive industrial sector backed by institutional capital deployment strategies. Ethereum's proof-of-stake network now secures over 34 million ETH, worth more than $100 billion, representing roughly 30% of total circulating supply. Staking yields between 4 and 6% annually have attracted institutional carry trade strategies, while liquid staking derivatives hold 31% of all staked volume, enabling yield optimization mechanisms without liquidity lockup. The Pectra upgrade in May 2025 enhanced scalability through counterparty risk mitigation protocols and introduced flexible staking options, while Layer 2 networks like Arbitrum and Optimism reduced transaction costs to under $0.01, unlocking DeFi and NFT activity through pre-funded account elimination. Think about this. Arbitrum won Verchenstedt in October 2025, approximately 4.2 million monthly active addresses and $14.5 billion in total value locked. That's not speculative hot money. That's real economic activity, generating fees, securing networks, and building programmable financial infrastructure. The regulatory renaissance nobody expected. This changes everything. The United States Genius Act, passed in July 2025, established federal licensing requirements for stablecoin issuers, mandating one-to-one asset backing, regular reserve audits, and transparent disclosures. The Securities and Exchange Commission and Commodity Futures Trading Commission have clarified guidelines on token classification, custody standards, and tokenized securities, dramatically reducing compliance ambiguity for banks, broker-dealers, and institutional asset managers. Europe's Markets in Crypto Assets, MiCA, came into full force in 2025, creating a unified framework for crypto asset service providers across all 27 EU member states, standardizing capital requirements, prudential regulations, and consumer protection measures. Our analysis of regulatory filings shows that over 40 crypto asset service providers have been licensed in the Netherlands and Germany alone since MiCA implementation, enabling passport-style cross-border operations and positioning Europe as a regulatory blueprint for global standards. Central bank pilot programs demonstrate unprecedented momentum. By September 2025, 81 central banks representing 98% of global GDP were actively exploring central bank digital currencies, with 72 countries in pilot or advanced development phases. The BIS Project M-Bridge, linking the Chinese digital yuan with the UAE dirham and Thailand's CBDC, achieved sub-second cross-currency settlement, validating programmable payment rails and setting precedents for private tokens to align with ISO 20222 messaging standards for correspondent banking alternatives and remittance infrastructure modernization. And here's the twist. November 2025 marks the official end of the ISO 20222 coexistence period on November 22nd. This is the moment when cross-border settlement optimization, Nostro account optimization, and real-time gross settlement systems transition fully to the new messaging standard. Industry insiders are calling this the largest infrastructure modernization in financial history, the alt-season evolution and DeFi explosion. What in the world? Alt-season dynamics have fundamentally changed. Bitcoin rallies first, consolidates in its high range, then altcoins surge with a 2 to 4 month lag, followed by market-wide retracement to a new plateau. But this cycle is different. Institutional capital deployment and fiduciary responsibility frameworks are replacing retail-driven pump cycles with volumetrically stronger, institutionalized alt-season waves backed by due diligence protocols. On-chain metrics illustrate this utility explosion. Daily active blockchain addresses exceeded 5 million by mid-2025, reflecting genuine transactional engagement rather than speculative trading volumes. Smart contract platforms Ethereum, Solana, Avalanche recorded peak throughput surpassing 3 million transactions per day, driven by automated market makers, yield farming protocols, and foreign exchange volatility hedging mechanisms. Decentralized finance total value locked rose 45% since January 2025, fueled by systematic risk assessment frameworks and capital preservation strategies, hitting $123.6 billion, with Ethereum accounting for 63% of TVL. The NFT market has matured from speculative mania into a diversified ecosystem, spanning gaming, fashion, real estate, and intellectual property. The global NFT market capitalization sits between $49 and $61 billion, with a compound annual growth rate of 41.9%. Ethereum retains 62% of all NFT transactions, OpenSea boasts 2.4 million active users per quarter, and gaming NFTs generate 38% of transaction volume. Average sale prices stabilized around $940, signaling market maturation, where speculative extremes have given way to utility-driven valuations backed by macroeconomic implications analysis. I did not see that coming. Charles Hoskinson, founder of Cardano, recently stated on CNBC, "We kind of won. We're like the dog as an industry that kept chasing the car and finally catches it. Regulators have finally embraced us. We're talking to the Federal Reserve, we're talking to the SEC on favorable terms, and now we need to reconcile the legacy world and the DeFi world and bring them together and just have FI, next-generation finance." What you're about to see will shock you. Within the next 3 to 5 years, every securities law will be rewritten. Selective disclosure protocols and rational privacy frameworks will be implemented through Basel III compliance standards. And tokenized securities will pull trillions of dollars onto blockchain infrastructure with institutional-grade liquidity sourcing algorithms. IMF working papers reveal that programmable tokens function as financial stem cells, capable of representing securities, commodities, currencies, or intellectual property with T+0, 24/7 global settlement, and full programmability through multi-hop payment routing.
The institutional adoption earthquake. A January 2025 survey by Coinbase and EY Parthenon of over 350 institutional investors found that 71% had digital asset exposure, compared to under 10% in 2020, and 41% held spot crypto positions, while 46% plan to invest in crypto-backed vehicles within 2 to 3 years. By mid-2025, more than 70% of institutional asset managers globally held digital assets, dedicating on average 5% of assets under management to crypto, while family offices allocated up to 25%. Corporate treasuries collectively held over $130 billion in Bitcoin by mid-2025, embracing the asset as an inflation hedge. MicroStrategy amassed $70 billion in Bitcoin holdings, generating $23 billion in unrealized gains. Insurance firms and pension funds began allocating 1 to 5% of portfolios to digital assets, recognizing long-term return potential. The Crypto Wealth Report 2025 identified 241,700 crypto millionaires worldwide, a 40% year-over-year increase, with Bitcoin millionaires climbing by 70% to 145,100, and crypto billionaires growing to 36. The government endorsement that changed everything. So listen, we are living through the most significant financial infrastructure transformation in a century. Treasury Secretary Scott Bessent declared in August, the U.S. has entered the golden age of crypto. We are exploring new possibilities in decentralized computing and digital payments to unlock the potential of blockchain technology. Start your companies here, launch your protocols here, and hire your workers here because we want to ensure that the U.S. is the crypto capital of the world. The White House's September 2025 PDF, Strengthening American Leadership in Digital Financial Technology, outlines strategies to tap into DeFi, tokenization, and stablecoin infrastructure, signaling official government endorsement of crypto as foundational to the 21st century monetary system. When the Bank for International Settlements, the central bank of central banks, states that the next-generation monetary and financial system will be built around tokenization and tokenized platforms, that is not a prediction. That is the blueprint for financial services modernization. Ethereum, benefiting from a delayed capital rotation, climbed from $3,500 in spring 2025 to over $4,500 by early October. Projections indicate Ethereum could test the $7,000 mark by end 2026 as institutional allocations accelerate with financial services modernization initiatives. Bitcoin has shown extraordinary upward dynamics since the second quarter of 2024, reaching values beyond $118,000 by mid-2025. Macroeconomic factors like rising sovereign debt, persistent inflation concerns, and the search for inflation-protected assets have repeatedly compared Bitcoin with gold and underscored its role as digital gold. The final convergence. We are watching crypto shed its speculative skin and emerge as the utility layer for global commerce powered by on-demand liquidity corridors and cross-border settlement optimization. After this cycle, crypto will be fully regulated through Basel III compliance standards, fully adopted by treasury management solutions, and utility-based projects will become exponentially valuable because of utilization at scale through institutional-grade liquidity mechanisms. Walmart's OnePay democratizes crypto access for 150 million weekly users. Samsung embeds digital assets into 75 million Galaxy devices. Stablecoins power $4.6 trillion in cross-border settlements. Tokenization unlocks $25 billion in real-world assets, with $3 trillion in real estate on the horizon. And regulatory frameworks, Genius Act, MiCA, ISO 20022, are converging to create institutional-grade liquidity pools, prudential regulations, and fiduciary responsibility standards that position crypto as the backbone of next-generation finance. Projects aligned with ISO 20022 like XRP, XLM, Algo, HBAR, and QNT are positioned to become the rails for correspondent banking alternatives, remittance infrastructure modernization, and treasury management solutions connecting legacy finance with the programmable money era. That November 22nd cutoff represents when the entire global banking network completes its migration to the new standard. If you've made it this far, you're ahead of 99% of the market executing due diligence protocols. Now it's your turn. Demolish that like button like it's a correspondent banking fee eating into your margins. Hit subscribe and activate notifications so you never miss the next mega reveal on institutional capital deployment strategies. Drop a comment below telling me which tokenized asset you're most excited about for your portfolio diversification matrix. Let's build this future together through financial services modernization. This has been your deep dive into the golden age of crypto powered by institutional capital deployment. Stay sharp, stay informed, execute your risk-adjusted return strategies, and I'll catch you in the next one with more systematic risk assessment insights.